We begin with breaking news. The Bank of Canada holding its key interest rate steady at 5%. While many economists expected the central bank to stand pat on, with the inflation trending downward and higher interest taking a toll on the economy. The bank didn't rule out future hikes as it cited concerns about persistent underlying price pressures. With more on this, we're joined live by Alan Small, Senior Investment Advisor with the Alan Small Financial Group. You surprised at all?
No, not really. We saw some, better inflation numbers this last go around, and so most were expecting they will be on hold. But again, the talk will remain tough. They will remain hawkish, and they'll say, if need be, they will be ready to act. So, I think that's, the talk is more important than the actual announcement itself in this case, because it keeps everybody on guard, keeps everybody from spending more.
Yeah, well, also the speculation about whether we could see another rate hike, in the next couple months. I'm wondering how you think that's going to impact those who are looking to maybe take out loans, lines of credit. They're looking maybe to get into the housing market. How is that going to influence those decisions?
I think it's going to slow everything down, or continue to slow things down, and that's what the Bank of Canada wants, right? They want us to think we could see higher rates. We're definitely going to see higher rates for longer. Don't expect a rate cut anytime soon. And I think that's the message the Bank of Canada is giving to all of us, because they want to see growth slow. Now, we are seeing it pretty much slowing down in our country. We're just trending along the flat line, maybe up 1% growth for the year. So we're pretty much as slow as it can get before we actually tip over into some sort of mild recession. But this is what the Bank of Canada wants. To get inflation down, they believe they need to slow things down. And by talking tough, even though they didn't raise rates, they believe that's going to be good enough to keep people on guard and perhaps not moving forward with these big spends.
Aside from consumers, what about the average retail investor out there who's got money in the stock market? They've taken margins, and they're just they're worried about paying those bills and paying those interest payments every single month. I'm wondering where you see that area of this conversation going.
Yeah, a great question. So investors are a little bit different, right? Because the stock market tends to move more with what the U.S. Fed says and does versus what the Bank of Canada says and does. Bank of Canada, when they set their policy, changes obviously. It affects our dollar, our bond rates. But overall, the stock market tends to move more so with what the Fed says. So their upcoming meeting, what are they going to say? And I think they're going to be on hold as well. But again, they're going to talk tough and say that a rate increase could be in the cards for December, just like the Bank of Canada is saying another rate increase could come down the road. Again, wanting to keep things slowing down, because in order to get a 2% inflation rate, we're going to have to see things slow down a little bit more, even still.
So you support this decision?
I do.
And what about a rate hike maybe a couple months from now? Is that going to improve, the situation for many people who continue to struggle right now? And we're seeing even just reports from our own Courtney Heels about the fact that, people with jobs, with somewhat decent paying jobs, they're still finding themselves going to food banks. That's really a sign of the times of where we're at right now.
Yeah, and the question is this lag, right? We all talk about a lag. How long does it take between the time they raise rates and it actually affects all of us? There's a lag. Some people say it's 6 months. Some people say it's 12 months. So what happens is, if the Bank of Canada or Federal Reserve in the U.S., if they raise rates too much, and then all of a sudden you get this lag effect kick in, that's when you start to see things really go downhill, and very quickly. So the Bank of Canada has to trend lightly. How long is this lag? Is it a 6-month lag, 12-month lag? Are the rate hikes that we saw earlier this year, have they already taken effect? And so that's going to play out over the coming, let's say, 6 months. Hopefully, our economy can trend kind of on a sideways trajectory. And then as the Bank of Canada says, okay, we're done raising rates, and perhaps even consider cutting rates maybe mid next year, stock market can gain some traction, and individuals can start to plan to grow their businesses, or perhaps we can take on some real estate investments that we may have delayed.
Alan Small, we always appreciate your time and perspective and breaking this all down for us. Appreciate it.
Thank you.